Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. mid-session brief, except it's not the mid-session. We're trading the Wall Street Open. It's been sort of a fascinating early session. We've had some pretty good movement in WTI crude oil. We've had a few economic releases that, I would call them peripheral, but they are moving the markets a little bit, and really the big story for the second day in a row is a major correction here in US 30. You can see our US 30 is absolutely plunging. If you are, in fact, following the 9 EMA or the 920, I'm watching the 920 relatively closely, really looking for a buyback opportunity potentially later in the day. I just don't know that we're going to get it. Right now the US 30 is off 360 points, which is almost 1%. And when you see a market taking a dive like this one's taking a dive, I don't necessarily know if it's a good idea to get in there and put on your knife-catching gloves just yet. So welcome back to the Trading Room. Welcome on YouTube. Welcome on X. Welcome wherever you may be watching, on Twitch. Today is sort of going to be a fascinating type of a day because it is No Donation Friday. We're going to talk a little bit about that psychology. It's been a while since I've done that. But we really are looking to trade today. And the reason why is we've got some good action. We've got some economic events. And right now, it looks to me like the markets are beginning a major correction. Now, I would say that because we went up, we ran all-time highs a couple days back in U.S. equities, and since then we've been in an absolute free fall. You can see that right now the Dow's off about 400 points, so we're well off of those highs that occurred just 48 hours ago. So be very, very careful if you're trying to pick a bottom here today. I'm going to show you probably how to do it in a way to maybe position your money and give yourself the best opportunity to win, and that's what this is all about. Remember, we need money to trade, and if you've got your money, you've got to protect it. You've got to put it in the right position. This is an interesting strategy right here. This is the 920 crossover 30-minute chart. Love the 30-minute. That's pretty much my favorite time frame to be trading U.S. equities on, or really anything on, except, Forex pairs. I love the 4-hour chart. But right there, there's your crossover. There's your move. RSI confirmation. We're in oversold territory. We're looking to get that rebound back up over. We're looking for that 9 to cross back over the 20 and maybe give us a long trade. So I'm interested in this. This is going to take probably the rest of the day to set up, but potentially we may get some sort of crossover developing towards the late day. And then this is one that you're watching on Sunday's Electronic Open to see exactly what happened to the US 30 and US equities in general. So a lot going on here. I don't necessarily know that it's a great time to be buying US 30, but we're getting there. I think that we're going to base out and have an opportunity to buy a pretty good pullback, and that's really what this is all about. Remember, if you want to buy pullbacks or sell tops or pick bottoms, Switch Markets has you covered. They've got you covered with all your CFD, your favorite CFD products, your commodity pairs, and then also your Forex majors, which is definitely what you're going to want there, the Forex majors. That's by far the most questions that I get on a weekly, daily, weekly, monthly basis are about Forex pairs. So if you want to trade Forex, Switch has you covered. As far as, what else we have going today, this is one of the things that I wanted to start with because we really are seeing just a tremendous fall off in the US 30, but there's also some other movers. And this US oil chart, this is a trade idea that we put out a few days ago. I liked it. We're not going to get it, but I thought we had a pretty good opportunity maybe to sell right up there, right around 74-ish, 74 and a quarter. That would have been a banger. That would have been an absolute great trade, a great trade to the short. It didn't develop, and when these things don't develop, you just sort of have to go with the flow and understand that, well, I got to wait. I just got to wait. They pay us to wait. They don't pay us to trade, and sometimes if we have to wait too much, we don't get paid much at all. But remember, you can make more in 20 minutes of trading a live market than you can watching a dead one for a week. And right now, U.S. oil has done some things today that have been absolutely fantastic scalps. I'm going to sort of walk you through a few of the trades that I took earlier, and let's go right down to a daily chart, and I'll show you my levels. This is sort of fascinating stuff because we really were in a position to where if we got that pullback, I was very, very, very confident that we were going to get the sell-off, and we just didn't get the sell-off today. Starting to turn into a trend day down now, 71.20 right now. We're trading right around that 71 and a quarter level. That's big for a couple of reasons, and I'm going to show you why. We had really some pretty darn good scalping, some pretty darn good trading a bit earlier today off of these daily Fibonacci's, and right there, spike low, spike high, and what do you got? We had a great level right there at 71.27. This up here, 71.97. It was all right, but the one that I was hyper fixated on and focused on was 71.27. Let's just go right down to a 5-minute chart, and you can see exactly what happened here. It's beautiful. I mean, it really was a beautiful trade. You can see right up here, this 38% level, I would have disqualified that because it's sort of saturated. You can see we hit it yesterday. It was great yesterday. pretty good. But today, you can't really depend on it to be great 2 days in a row. But if you are going to trade like that, you've got to make sure you pull the plug on these things and do it fast when it gets out of hand. Right now, we had that 62% level come into play, and boy, was it ever a banger. Your low right there was 71.25. The level itself was about 71.27. Bang, bang, nice big rotation. Back up to 71.59. That's absolutely fantastic stuff for 35 pips. I mean, there's no ifs, ands, buts, or coconuts. That's an absolute fantastic trade. Now we're on the downside. We're on the downside of this level, and right now we're wondering, where is it going to stop? Is this market going to stop and rotate back above the 62%? I don't believe so. I think that you're going to finish coming off today. I have a range number right down here, right around 71.13. Unfortunately, I'm not going to get that trade because we're live streaming right now, but that was one that I was really looking to execute. Let's go on over to my futures contract, and you can see we've got a few technicals up here. But the biggest thing that I really wanted to point out was that the Fibonacci sequence is very, very similar. This is going to be your new front month WTI futures contract, which is going to be April 2025, and you've got something like this: spike low, bang, bang, spike high, and you can see, I mean, this was the level that we were doing business earlier at 71.27. I've got a range number right down here at 13, which I think probably has a chance to be the bottom of the day. But I believe that we're probably going to trade down to that 71 flat level. And if that does occur, then I would probably put out a 5-star recommendation on bidding 78%, probably bidding like 70, 80s, somewhere down in there. So right now, WTI in a bit of a correction off of, negative 1.7%. Do we believe we extend to negative 2%? More than likely. More than likely. So right now, I don't really believe in fighting trends. I think you get in big, big trouble way too fast fighting trends. So this is one that I'm definitely keeping a close eye on. But I like this potentially for a late day scalp right after we probably get off of this live stream. Absolutely can't wait to get involved there. As far as the rest of it, we had another trade idea out that was a U.S. dollar Swiss franc. This was one that was definitely a trade that I'm watching very, very closely. I think it could come into play as early as next week. You can see the DXY, the dollar index, is sort of rotating around 106.50, but it is falling a little bit over the past week or so, and that has led to that Swiss franc getting a little bit of traction against the dollar. Now, I don't know that the dollar is going to stay down against anything very long, but I do know that safe havens are where it's at. Right now, we see gold trading at right around 29.30. We're going to talk gold in a minute. Downward pressure on WTI crude. That shouldn't surprise anybody, given the new administration's pledges towards doubling and tripling up energy production here in the States. And as fast as the Trump administration's moving on most things, a lot of folks are definitely bearish WTI crude. I'm one of them. But as far as what does all this mean for safe havens? It means safe havens are in great shape. The Swissy is going to catch some bids. Gold is going to catch some bids. Silver is going to catch some bids. And the reason why is because we're just in a period of uncertainty. That's all there is to it. We're absolutely uncertain. We don't know what's coming next out of the Trump administration. We don't know who's going to announce what next. And it just is what it is, guys. It's a period of uncertainty. The Fed is sort of fighting us on the tariffs. They don't believe that we can have low interest rates and tariffs, high tariffs. And it's just a period of economic change, and I expect there to be some growing pains. However, if we do, in fact, get this Swissy to correct a little bit, then we've got a great shot right there at 88, 85-ish. And we put that trade ID out yesterday. That's a pretty doggone good one. I'm watching that one closely. Let me see Ali. Good to see Ali. Ali733. Hi, how you doing? Let me see. Got a question. Don't you get confused using many strategies here on this channel? Well, the idea behind the strategies, Ali, and I'll cut you guys straight. The idea behind putting out all these strategies, and we've got a lot of strategies out there, everything from opening range breakouts to 9 EMAs to crossovers, is to get you guys thinking. The name of the channel is How to Trade. And I can sit here and I can basically write a book on Fibonacci retracements and how I like to use fractal geometry to make my trades. I did that for, 2.5 years. I put out exclusively what I like to do on these live streams. And today we're going to talk about that a lot because I know that these give me the best chance to win. And if I'm going to make a trade recommendation or say that we're going to get a pop from somewhere, it's probably going to be one of my levels. But there are other ways to trade. And it's important that you guys understand that there are a ton of ways to trade. These crossover strategies are some of the most popular in the world. There's so many people trading crossovers right now. Personally, I don't really trade crossovers, but I know how to trade them. So the idea behind putting maybe a 920 video out, a 9 EMA video out, an opening range breakout video, you're going to have a 5813 video out that drops next Tuesday. The idea is to get you guys thinking and to attract new people into the channel so we can start talking trading and start talking how to get the job done. Now, do I trade the 920? No. Do I trade the 5813 with my money? No. I trade Fibonacci retracements. I trade 13 EMA. I trade convergence. And that essentially is exactly what we're talking about with this trade idea here. Dollar Swissy right there. Moving average converges right with that 38%. This was the trade idea that we put out yesterday. Very confident that we get some love right there. I would be very surprised if we trade beneath that zone. Right now we're about 100 pips off, about 80 pips off of entry, and I think it's just going to pan out to be a pretty darn good trade for us. More than likely we'll get that next week, and if we don't get it next week, potentially the week after, but it's definitely worth looking at. No question about it. Let me see, Ali. I personally like to keep my charts clean and trade based on liquidity and support and resistance. You know, Ali, I've talked to a lot of liquidity traders and a lot of order block traders. Inevitably, they wind up using indicators. Unless you're the guy that invented ICT, and I've listened to enough of his nonsense. But really, what it is you eventually end up using indicators, because the problem with an order block and the problem with liquidity sweeps and all this stuff is which order blocks do I focus on? What liquidity sweep? What do I do here? Okay, 5-minute chart, and I can already hear the ICT guys and all the smart money going, okay, well, we've got a liquidity sweep here. We've got a liquidity sweep right down in here. This was a nice one. We had a really big, just sort of a stop hunt right here, and we knocked all the shorts out of the market, and now we've just sort of retraced back down after all the retail's gone. Okay, all that's great. How do you trade it? You know what their answer is? Honestly, I know a lot of these guys. You know what their answer is? Buy that. Sell that. I go, okay, well, that's great. When should I do that? The rest of the day? Should I do that Sunday? Should I do that Monday? Should I do that Tuesday? Why buy there and why not buy there? Why sell there and why not sell there? These are all order blocks. They're all order blocks. See what I'm getting at? If you can make it work for you, great. Personally, for me, I like my moving average. I like my Bollinger Bands. We haven't even really talked anything about TPO charts, time price offering charts. That's a more advanced way I like to trade crude oil with actual volume numbers. But realistically, your indicators are always going to lag. And one of the biggest things about the order blocks and the ICT and the liquidity guys, they all say, well, indicators are always lagging. They're worthless. And I go, no, they're not. You don't necessarily trade according to indicators, but what you let indicators do is let you show you what the market is doing and what, more importantly, what price is doing right now with respect to what it did. Right now, I could say, okay, I put my Bollinger Bands up there and I'd say, all right, which is my best bid? Do I want to bid this lower Bollinger Band right there on that 5-minute chart? Maybe try to get a scalp off that sweep, off that bidding area right there, that area of support. Yeah, you could do it. Do I have more confidence now that I have an indicator there? Yeah. Why? Because they're parallel. My Bollinger Bands are parallel. And when you've been watching Bollinger Bands for 15 years, you understand that when they're parallel, that means the market is in rotation. Even though this looks like a big breakout trend and, oh, we got a breakout, you're in rotation. We had a nice break. What happened? News event, 7:45 my time. We're going to talk about that in a minute. We had, I believe it was ISM Global something or other, something like that came across the wires. It was a peripheral event, ran price, and now all you're doing is just filling back in. So if you understand a little bit about the fundamentals, you understand some technicals, it can help take your order block trading or your liquidity zone trading to the next level. Most of the traders that I've seen that trade ICT concepts and order blocks, liquidity sweeps, and all that jazz, they wind up using indicators just for reference. Not necessarily to build their trading decisions, but for reference. See right here. So the question is this one going to hold? Maybe it does, maybe it doesn't. I don't know. I can tell you right now we're moving a little bit, though, in that gold market, and that's absolutely fascinating to me. I'm watching a couple trades of gold futures later today. As far as our crude oil trade, you can see right here, we're going right down to my lower range number, which I don't have on my chart, but and that's honestly, Ollie, this is another thing that I like to do. I do have some range formulas where I try to predict the bottom of a range of 30-minute bars of daily ranges. They're pretty darn accurate. This one was right around 13. So let's go back to that 1-minute chart and see if we got any love off of this. Yeah, right there. You had a hard strike of 13 and then a pop right up to 16. So I'm watching this level closely. We could definitely go lower, though. No question about it. No question about it. Yeah, no worries, Ollie. That's what we're here for. We're here just to sort of answer questions and work through a Friday session. All right, let's talk about a little bit of psychology here before we get too deep into any more analytics. This is No Donation Friday. What I like to do on No Donation Friday is put half of the money that I've made for the week in my pocket. So this week I'm up, what am I up, about 500 or so. Been a real light week. We had President's Day Monday. Wasn't feeling real great, so actually didn't even trade Tuesday or Wednesday and traded yesterday and today. And for me, when I come into a Friday, the last thing I want to do is blow my entire week's my entire week, all the money that I've made. I don't want to blow it on a Friday. And so I make sure that I adhere to these rules. I think they're important. Winning week, if I'm having a good winning week, I want at least 50% of my profits. So if you're up a couple $100 for the week, or 300 or 400 or 500 like I am, then you just put half of it in your pocket. That's as simple as that. Losing week, if it's a small losing week, just go ahead and trade as usual. If it's big, you might want to wait until Monday to trade. And the reason why is if you're having a big losing week, it means things are not going well, and you're better off coming back Monday fresh and ready to go and with a full 5 days to make your money back and then some than trying to get it all back on a Friday. And the idea there is you're going to have probably a real tough go of it trying to press that leverage and try to erase all those weekly losses in one day. If you're in a big hole going into Friday, it means things aren't going well. You're not seeing the market well. And what is important is that you understand this is a marathon. This is not a sprint. You want to have a lot of winning days and a lot of winning weeks, but sometimes you're just behind. And what you don't want to do is you don't want to go way behind when you're down a little bit. So be careful. If it's a small trade as usual, if it's a big losing week, I would really scrap it and come back Monday. If you're neutral, and this happens to a lot of us, you have Friday rolls around, we've won some, we've lost some, then you do whatever you want. You can reduce your leverage. You can don't trade at all. You can be looking as trading as usual. I mean, that's completely up to you. You can do absolutely whatever you'd like there. So interesting. All right, I'm out of one corner of my eye. I'm watching my WTI crude oil level right there at 73.13, and it is working like a charm. You can see we went right down to 71.09, and now we're going to rotate back up to 71.18. You already got a nice 5 pips off of that. That's typically what I'm looking to make, 5 ticks on 3 or 4 contracts. And we get that nice little bounce. Do I believe the bottom is in? Not necessarily. That down there is probably going to be my money trade, my big leverage trade later today. If we get a chance maybe to buy 70, 80, somewhere in there. That probably, honestly, that's probably going to be the bottom. This area right in here, though, putting up a hell of a fight. There are some bidders in this market, and for a market that's down, WTI is off about 1.85%. This isn't the biggest downtrend I've ever seen. This is a real swift sell-off right there. But I'll tell you what, we bounced back. There are bidders in this market, which surprises me. That's for sure. Let me see. No, that's all right, Ollie. The best thing to do is just to adopt something, a strategy, and go with it. If you like the liquidity sweeps and you like the order blocks and the smart money stuff, do it. The ICT stuff, do it. I have no problem with that at all. I know those traders. I know quite a few of them, and they have some success. The biggest thing is just to pick something that's intuitive to you that makes sense. For a lot of traders, it's just things like 9 EMAs, crossovers. They're easy to understand, and they're easy to implement. And that's really what this game's all about. It's just about being easy like Sunday morning. Is there a video out of the strategy you use? Yeah, it's in the trading room. Go to howtotrade.com. Go ahead and sign up and sign in. Go in the trading room, and it's under our trading academy. It's called the Fibonacci Counterpunch, and that's under the Elite Trading Series. So you can come on in. There's 4 or 5 videos there that I made a couple years back, and they really show you what I like to do. And if not, just check out a live stream or two, and we certainly go over a lot of different trade ideas. All right, let's talk gold. Everybody likes gold. We sort of got down into this 5-minute chart. One of the things that I really like to do is I like to frame the markets with my macro levels. And the reason why I like to do that is because they give me a great chance to win. So if you've been looking at our trade ideas for any length of time, then you know I'm sort of bearish. Not really bearish gold, but I definitely love that scalp right in front of 3,000. So we've got 3,000 on our radar. We're looking to sort of short right there from 29.94, somewhere in there, 29.94.50. Once again, check out the trade ideas, and you can definitely get sort of dial this trade in. For me, 3,000, you're looking to sell 29,994s. We're not quite there yet. 29.28. So right now it's a two pony race for me. I'm looking to sell from right up there, or I'm looking to bid a significant pullback, something like that. Spike low to a spike high. Pullback is right there at 27.96. That's a great trade. Are we even in the ballpark yet? No. we're not in the ballpark. So just by looking at this chart, and listen, there is a time and a place just to get all the indicators off and just look at price action. Clearly, we're in a bullish trend. I mean, there's no doubt about it right there. Compression, break, pull back, break. There's plenty of room here to try to get long before we get to 3,000. There's nothing wrong with that. So let's go ahead and see if we can find something that maybe we can pull up and gives us a chance to trade. The weekly chart's going to be really difficult. You're not going to have that opportunity. It's going to be a lot like that monthly chart where you can see we had just a beautiful pullback right around 27.50 and then some compression right around between 27.50 and 25, and then we broke. Okay, well, now we broke, and we definitely want to get long, but it's hard. It really is hard. For me, I'd be looking at Fibonacci's going, okay, I'm still down here at 28.17, which is just way down. It's $100 off. Probably not going to get that trade. So what we're going to have to do is just keep increasing the granularity. We got to keep going down and checking out our levels on different time frames. And right in here is going to be a pretty good Fibonacci sequence that I'm looking at later in the day. Spike low there, spike high. What do we got? Okay, we're trading right around that 29.25 level, which is 38%. I'm not really interested in taking longs from there because we've been trading that level for a long time now, about a couple days, 48 hours. That market is saturated. Don't want anything to do with it. Now, 50% down there at 29.16. I'm still not a fan of 50%, so I'm probably going to pass on that one as well. But my next entry is going to be somewhere down there, right around 29.07, probably 29.10-ish. I want to be in on that trade, so I'm more than happy to take a risk and put a nice shade in and have an opportunity potentially to step up to the plate and bid that thing with a little bit of conviction. Interesting stuff right there, guys. 62% on this daily. That's probably what I would be targeting for early next week. I think you got a great shot there. And that essentially, to sort of go back to Ali's question, as far as indicators go, I mean, the Fibonacci things that I like to do are price action strategies. This is built on trading ranges, and it gives you horizontal support and resistance levels based on previous trading ranges. And that's important because I always get, and you had a great question earlier about the indicators. I like to believe me, there's a time and a place for indicators. Indicators help us put past price action into context. We're always looking for context on what the market's doing right now with respect to what it's done in the past. But as far as predictive value, do indicators have predictive value? No, they don't. They're all lagging. So if they're all lagging, the best thing we can do with an indicator is, number one, discern our market state, figure it out, and number two, come up with a game plan on how to trade prevailing price action. That's why I lean hard on Fibonacci retracements and fractal geometry, because they don't necessarily have predictive value. I don't know what's going to happen at these levels, but I do know this. With my other indicators, I can easily see a trend. Bollinger Bands help me spot a trend in just a few seconds, and so does my 13-period EMA. So right here, I'm saying, okay, what's the trend? My EMA makes things obvious. Look at this EMA Bollinger crossover that came back on the 10th of January. Clearly, we're in an uptrend, no doubt about it. Look at the Bollinger Bands. They're wide apart. They're not tight. When they're tight down in here, it's tough to trade them. It means the market's moving sideways now. The throttle is open, and we're clearly moving higher. What do those two things tell me? They tell me, number one, we're trending. Number two, we're in a bullish trend. Number three, it's time to trade. So if I want to trade and I want to take a risk today, I want to get with the trend. I want to bid. So I want to bid. And whether or not I get any of my bids a little bit later today remains to be seen. It's really hard to say right now. I think we have a chance. We could definitely get a later day sell-off, but our economic numbers didn't really move us much of anywhere. Remember, if you want to trade all this stuff, head over to Switch, bring your ambition into focus, and see if you can make a little bit of money. But these were the numbers that were supposed to really skew our markets today. They didn't do anything. S&P Global Manufacturing PMI, those numbers don't do much. We saw a little bit of added participation that flowed into gold, a little bit of a bullish bump there on that 5-minute. Remember, we looked at the 5-minute chart. But as far as what do these numbers mean, they don't mean anything. Right now, these markets are all about Fed policy. They're about what Jerome Powell says, and they're about the new tariffs. That's what these markets are all about right now. So these things are going to become less and less important. Believe me, less and less important. Now, existing home sales, everybody's watching the real estate market here in the United States because it is sort of looks like it's taken a bit of a tank given the higher interest rate and also potentially expectations for those mortgage rates to stay higher longer. You see existing home sales, you're off about 5% down to 4.08 million. Still relatively strong, but still, you're still off 5%. Wintertime, winter months here in the United States, I wouldn't get too blown away with that number just because that's seasonal, I would say, more than anything. And then you've got all your inflation expectations, and Michigan consumer sentiment came in at about 64.7, which is way down from the previous release and what's forecast. And the reason why is all of the uncertainty about our interest rates and our tariffs. And that is exactly what's going on here. This group of numbers, a lot of us were depending on them to move the markets to maybe give us a trade. We didn't get it. We just didn't get the kind of love we were looking for there, and that's going to be sort of unfortunate. I was really hoping to get a good trade on gold today, but it's going to be tough. All right, let's go back to our WTI crude, and that range number worked like an absolute charm. 71.13 trading up to 71.28. I still don't believe the bottom's in, but my range numbers are good. And don't even ask me. I'm not teasing you either. You can't ask me. Those are proprietary, but those essentially are designed to call the bottoms and the tops of futures contracts. That one worked perfect. So we just got sort of left out of that. That's okay. That's life. All right, let's see. Let's go back to our US 30. Now you can see we're still in a free fall here. Let's look at the E-mini NASDAQ right here. Let's take this down, 30-minute chart. You can see we're definitely in oversold territory. You actually had a tremendous opportunity to sell this thing going into the open. Right there, you were in overbought territory. There was your 9 crossing over your 20, and there's your short. That's pretty good stuff. Pretty good stuff right there. So if we went on maybe a short time frame and wanted to scalp it to the top side, you'll see, that is just a tremendous look. 1 minute chart, we're getting right down into the granularity of these markets, about as short as I would ever consider going. And then right there, you're sort of in oversold territory again on this NASDAQ. So if you were going to try to pick a bottom, you know what this is all about right there. This is about the 9 crossing the 20 and then getting in with decent trade location. That can be a bit of a challenge, especially if you're trying to pick a bottom on something as volatile as this NASDAQ. So I'd be watching that close. You're not going to get that for a while yet. Probably, I would say another hour. You might get it sooner, but I wouldn't look for these markets to bottom probably for another hour, 90 minutes, right around that mid-session. We usually have a mid-session brief, probably right around then. Okay, guys. Let's go ahead and look at a couple Forex pairs, and then we'll call it a day. Call it a week. It's been a long week. No lying there. U.S. dollar, Japanese yen. Really a lot going on in the yen. You can see that the yen has gained a lot of puff on the USD over about the past week or so, and a lot of that has to do with the Bank of Japan hiking interest rates. It's great stuff. We're in an incredible time to be alive and in the Forex market. There's going to be some great trades that come across the board. This is sort of what we're looking at for I would say the current level. This isn't a perfect Fibonacci retracement sequence on the monthly because of this spike low right here, but this one is a nice, beautiful swing low. I don't really have a problem putting my Fibonacci levels there, but they're not as perfect as I'd like them to be. One thing that I would be focusing on, maybe 146.90, but for right now, you really have to just step back and say, it's time to sell. Sell, and then sell some more. And do we have an opportunity to do so on our weekly? And this is another great example of what the order block traders would say. They'd say, okay, there's a liquidity sweep right there. We're going to buy. It might work. It really might work. The only problem he has is if in fact that spike low that was formed back on the week of December 2nd goes, then you're going a lot lower, and you probably trade down into there somewhere. As far as, where could we actually get a level? I want to be short. I don't want to be long, and that's a big change for me. I've been basically preaching the long side of the U.S. dollar Japanese yen for about the past 3 years, and the game's changed now. 4-hour chart, you can see we sort of already missed our pullback right there. Would have been our pullback sell, nice compression and a nice break. So if in fact you were going to sell intraday stuff, or if you were going to trade the yen intraday, you really have two options. Once again, we're talking a lot of order blocks today, but right there would be your buy. You could definitely put a buy on. I would be looking to sell this thing. I love the market when it's sort of trending, so the way that I would do it would be looking to grab a Fibonacci retracement off of maybe a swing low, potentially in the next 30 minutes or an hour, get that pullback sell. This would be beautiful, selling right up there 149.95s. That would be great stuff. Keep your eye on your trade ideas. We're probably going to have another one out here in a little while, and it could definitely be facing the dollar yen. All right, we got one question left, and I'm going to go ahead and sign off. Let's see, Euro Swissy, absolutely Euro Swissy. All right, nice big move. Once again, more of the same. I mean, we've seen a lot of these spike lows, a lot of these sort of pin bars that I would call it sort of an inverted not an inverted hammer, but almost a regular hammer. Really, to me, hammers are very important. They signal market reversals, and that's exactly what that one did. Let's go ahead and see. What do I want to be, long or short here? Okay, this would be a pair that I would be looking for a support zone. I'd be looking for a support zone, a lot like our dollar Swissy trade idea that we put out a bit earlier. So on our daily, you'll see just exactly how choppy this is. There was a comment in the live chat yesterday made by Wizard Alvin. He says, look at all the daily indecision bars. And what we're talking about, at least what I believe he was talking about, was dojis, things that just show you that, yeah, the market really doesn't have a direction. This doesn't either. If I was looking to bid, you definitely could be looking at maybe a double bottom down there. There's a double bottom, but this is tough stuff. I mean, this is really a tough pair. If you're getting chopped up today, I understand why. It's been a tight week. You're sort of in a non-committal area. You're right around your moving average, and you're right around your Bollinger midpoint. And those two things are really have you in sort of a log jam in no man's land. This is a tough one. I mean, if you're holding longs or holding shorts, I hate to say this, but I sort of wish you luck. As far as an intraday time frame goes, I would steer clear of this. I mean, you're more than likely going to get chopped to death. And, look at your 4-hour chart. Complete rotation. I would reference this. I would go back to my daily, and I'd say, okay, what actually gives me a chance to win? This area down here, that zone right around probably 90, 93, 80, somewhere right in there. Let me do this a little bit better for you. Somewhere right in this zone, you can see just how much business. Darn it, come on. Just how much business that we've done in here. Right down in there. So this zone right in here, we've done a tremendous amount of business, and there's been bidders there. So that's sort of a textbook demand zone, meaning that every time we get down right into this area between probably 94 and 93.75, there have been bidders home. If you're holding shorts, you could probably hold them until you get down into there. If you're not in the market yet, that's probably going to be your long location. Just be very careful down here. One of these things about rotational markets, like this Euro Swissy right here, is when the market finally does move, then it blows up and it goes directional. So don't get caught on the wrong side of a big move. All right, everybody, I want to thank you for joining me this week. It's been a challenging week. We had President's Day, sort of screwed everything up Monday. And then we had FOMC minutes on Wednesday, which was really a big market mover and fighting the flu all the way through it. So don't feel the best, but it's been a good week. Made a little bit of money. It's really all you can ask. I'm going to be looking maybe to make it just a little bit more today. One more trade. I think one more trade is what we got in the books. That's a wrap, everybody. If you need anything, swing by howtotrade.com, sign up, go on in the trading room, send me a private message. I'll be more than happy to get back to you. Our YouTube schedule, our posting schedule is a little bit different, so if you're looking for a YouTube video today, they're going to be coming out Tuesdays from here on in. We've got a lot of things going on here, and so we're going to just sort of divide our time up a little bit different moving forward. That's a wrap, everybody. You have a fantastic trading session. Trade the action well, and we'll talk soon. See you.